everyone, my name is Adrena G, and today I'm coming to you with another tax tips with a CPA. So for today's video, we're going to be talking a bit about tax planning for individuals. So what this is just a fancy way of saying how can you best utilize the tax law and the tax code in order to be able to maximize your profit, net income, and minimize the amount of tax liability that you owe each year. So with that, there's usually for individuals, you qualify for deductions and credits each year that go against that tax liability line and reduces the amount that if you qualify that you do have to pay back to the IRS each year. So I'm gonna go over like the five biggest deductions and credits that individuals do tend to qualify for each year, but not many individuals know about it or aren't taking advantage of it. The first one is the student loan interest deductions. So basically, taxpayers can deduct from their individual tax return the applicable amount of interest that you have paid on your student loans to the government each year. So at the end of the year, you usually receive a 1098-E. So that form tells you the amount of interest that you paid on your student loans, and as a taxpayer, you can deduct that amount from your tax return. The second one is the American Opportunity Credit. This credit is for qualified educational expenses paid for any eligible student. It has to be 4 years of higher education, is very specific. And the maximum amount of credit that you can get each year is $2,500 per eligible child. So if you have eligible students who you're spending tuition expenses, living expenses, those all can qualify for that $2,500 a year per eligible child. The next one, right along that line, is a lifetime learning credit. This one is important because it does not have to be degree seeking. It can be for a secondary education, something that you use to improve your qualified skills, and it's the maximum amount that you can claim on this credit is $2,000. So compared to the American Opportunity Credit, the Lifetime Learning Credit is just another advantage for taxpayers to be able to utilize those educational expenses and get that deduction. Say you're a full-time student and you already expense the Lifetime Learning Credit, but you're going back for a second degree a second course, or like at a community college that may not necessarily be degree seeking, you can apply and be able to get this credit if it is within the guidelines of related eligible educational expenses. And then the fourth one is the child tax credit. So this is a credit for qualifying child. It is in addition to the child and dependent care credit. So it cannot be claimed for a qualifying child that is above the age of 17 or older. And the maximum amount that you can get for this credit is $2,000 per year. So this is an additional credit in addition to the child and dependent care credit. And it can be used for, say, a relative that you take care of that is under the age of 17, a loved one that you're caring for that does not have enough income to be considered a taxable individual, right? So there's a lot of guidelines that go into it, but this is something that people do qualify for, but not many people take advantage of it.